Welcome back to the channel. My name is Enrique. Thanks so much for watching. All right, so I had not created any content whatsoever covering the what ifs of what if the Democrats and Republicans do not come to a resolution in regards to this debt ceiling thing. I didn't think that it was worth it. I knew that the obvious is that they're going to come to a resolution, so that's why I didn't waste any of my time or yours covering something that was never going to happen. So that now that the obvious happened, now that they came to a resolution, we're going to see the markets go green, at least in the short term. What's going to happen next? Risk assets like BTC, the US dollar. How is it going to be as far as the price action for the rest of the summer and for Q3? That's what we're going to break down today. I have some very, very big thoughts on that. Pretty strong thesis, I think, in regards to how that's going to play out. So let's get into it. All right, so what seems like forever, we've been hyper, and I do mean hyper focused on what Powell and the Fed have been doing, what they're going to do, what they're planning, what the notes are from the meeting. We have dissected these guys from A to Z. So now things are going to change a little bit, at least short term. Now our focus is going to be more on the Treasury. What is Yellen going to do? And the reason being is that now that the debt ceiling has been raised, well, they're going to have to issue more debt. And that's why Yellen is now going to be the one that we focus on the most. Yes, we're still going to be very much focused on Powell, and I'll explain why the two working in tandem is going to be so important. But with Yellen, now we're going to focus on what kind of debt they're going to issue. This is why. As we know right now, we are in a period of quantitative tightening, and liquidity, as we see every single day, these markets are so incredibly liquid. Sometimes it makes it for really tough trading. And really tough investing. So Yellen now has to decide, well, should I issue debt that is more focused on short-term maturity, which is 1 year or less, which would be comprised of mostly T-bills, or should she be looking at issuing debt that is comprised of a longer-term maturity period? For example, coupons, bonds, notes, all that good stuff. So that's where things get really, really interesting. Let me tell you why. If she decides to go with the longer term maturities, that's going to create a lot of issues for risk assets across the board, whether it's BTC, technology, whatever, the traditional markets. And look, I hate it that BTC is still considered a risk asset, but it is what it is. And until things change and there's more education and more people realize that it shouldn't be a risk asset, that it's the strongest, most secure store of value ever created, we're going to have to treat it as a risk asset until that changes, right? But I'm digressing. What I wanted to state here is this. If Yellen decides that the issue she debts is comprised mostly of longer term maturity type debt, for example, let's just use bonds as an example versus T-bills, which is short term, that's going to drain, and I do mean drain, the markets out of even more liquidity. So keep a very, very close eye on that. Now, can she do some kind of mix between T-bills and bonds, so short-term and long-term? Yeah, of course. That's probably what they're going to do. But what we want to focus on is where the most volume and the bigger number is focused on with that debt issuing. So just keep an eye on it. If it's longer-term debt, then yeah, that's going to really, really hurt the markets, and we could be in for a pretty crappy summer in Q3. Maybe just more sideways and down. I don't think BTC will test new lows or anything like that, but I just think it's gonna really suck as far as liquidity. Now, back to the Fed. Now we know that the Fed is still under quantitative tightening. They're hyper focused on deflating this inflation monster, and that is, if you think about it, with the Fed doing their thing to fight interest as much as higher inflation as much as they can, and Yellen doing the same and draining liquidity from the markets because she too is very worried about inflation rising, you're going to have this kind of like double hit on liquidity in the markets. So you're going to just have even less liquidity in the markets than we have now. And just think about what that looks like. So I think they're both working hand in hand. to try to defeat the inflation monster as much as possible. And if you look at what they've been talking about, so especially Powell, when he talks about things, he's very, very focused on the fact that, hey, I'm just looking at things from a monetary perspective. I don't deal with fiscal responsibilities. The reason why he's always making that line very, very distinct is because he knows that he's kind of like battling the government. He's fighting the Biden administration that just wants to keep spending and spending and spending, right? So that's a fiscal issue where he's more looking at the monetary issues. So it's a very complicated thing. It is nuanced, but just that is my thesis right there. It's all going to come down to what kind of debt Yellen issues, short term versus long term. And if it's long term, it's not going to be a fun summer. Sorry, that's the case. And I think that's what she's going to do because her and Powell are working hand in hand. So am I super incredibly bullish on Bitcoin long term? Absolutely. The halving is next year. We have a lot of cool things to look forward to, and can't wait to see what that price action looks like. But unfortunately, my thesis is that we might be in for a pretty dull summer and even less liquid summer than we have now. So yeah, that's my thesis. Sorry for the bad news, but hey, it's just going to give everyone more time to be able to stack up more really inexpensive BTC, more inexpensive ETH as we get ready for the next happening, as we get ready for the next bull run. All right, I hope that today's video helps out, and I'll see you in the next one.